Former Barclays CEO Bob Diamond, he led the firm's bid to buy key assets, remember, from Lehman Brothers. Following the subprime mortgage crisis, he's now founding partner and CEO of Atlas Merchant Capital. How much deja vu are you having right now?
It's a bank run, and bank runs are scary. And I think it was, I think the actions that have been taken by the Fed were appropriate. I think when you just get to the narrow issue of a bank run, which was the action that was happening, banking and deposits are so much about confidence. And then if that confidence or lack of confidence gets momentum today and tomorrow and the rest of the week, I think we would have been in a different position. So I certainly applaud the actions that the Fed and the Treasury and the DFIC have taken to kind of stem that, and I think they've taken appropriate measures.
But it doesn't fully appear to be working, though. If the measures were in an effort to stem confidence and ensure uninsured depositors, why are we seeing First Republic down 65%?
So I think you're looking at the equity, and people are starting to project, what's the business model going to be going forward. But I don't believe that the regulators, in this case the Fed, the Treasury, and FDIC, are going to allow other depositors at other banks to lose their money. Now, they haven't said that, but the president says we will do whatever it takes. It echoes Mario Draghi of the Bank of Italy when they were in such a terrible situation. Remember at that, it was after the crisis in 2011 when capital was coming out of the banking system. So I think job one, yes, right. Yeah. Job one is to stem the bank run and to calm depositors. And then I think there is a step two about what are the other actions that we'll take in the medium to long term. But for the weekend, job one, I think, was accomplished. And I think that I have no doubt that if there was a similar situation in other banks today, tomorrow, and Wednesday, that they would take the same actions.
Clearly, there could be some overlaps with 08, but I mean, there we were talking about a vast number of assets based on a really faulty asset, namely the fact that people were going to pay back their mortgages when they had no ability to do so. But, I wonder, something else that has changed is the ability to get your money out. The digitization, is far more than it was 15, 16 years ago. I'm just curious as to your thoughts about anything we may have learned here in terms of watching something on Twitter and saying, that's all I'm going to take, I'm out.
Well, I don't follow social media, so I'm more reading about the actions of social media, but I'm sure people will think about that going forward. And I've heard stories about the percentage of deposits that were moved via the cell phone, for example. But to me, the biggest issue, having been an active participant in 2008, one of the things that the regulators talked about is the SIFIs, the strategically important financial institutions. And while nothing today is systemic in the way it was systemic then, I think there are other broad issues today. So even before this happened, over 50%, David, of the deposits in U.S. institutions were in 4 U.S. banks. And who thought in 2008, when the regulators encouraged a broader financial services industry, less concentration in the big banks, less systemic risk, that we would have a far more concentrated banking system in the United States of America than we had then. And that's the reality. And I think we have to be thoughtful here about the value that small banks bring to so many business industries. I mean, we're not trying to go back to Standard Oil and JP Morgan. We think one of the great attributes of the capital markets in the U.S. is the diversity, the liquidity, the number of participants. And so we have to balance both of those things. And I think the role that the thousands and thousands of banks in the United States play is very different than what you would see in many economies in Europe. And I think it's a huge strength of our economy and access to lending for so many small businesses. So I do think we have to be focused right now on the here and now and stem a bank run. But I think we have to be thoughtful going forward about the implications of more and more concentration on 2 or 3 or 4 banks with the deposits in the United States.